Let's talk about the S&P Eminis Part 1. Okay, so first thing, what trading platform can you use? You could use any trading platform out there that trades futures to day trade the S&P E-mini futures. They're all going to do the same thing. Some just might be a little better than others. Some you might have cheaper commissions, but you need to pay for data fees. So you'll need to kind of do your homework. A couple ideas out there is there's stage 5 trading. There's Ninja Trader where you could trade. There's your E-Trades, your Fidelities. So you have a lot of different companies out there that you can actually trade through. I personally trade using Thinkorswim by TD Ameritrade, also known as TOS. Okay, so if you hear me say TOS throughout the video, it's Thinkorswim. Okay, but TD Ameritrade is the main brokerage firm. I've been using them for about 13 years, and I have to say I love them. Out of the 13 years that I've traded with them, I've probably seen them have issues for maybe 5 or 6 times, and I'm on the platform all day, every day. So the tools that they give you are amazing, and it's just, it works. Okay, that's all I'm gonna say. I used to work for a brokerage firm, and there were so many times where nothing worked on the trading platform for the firm that I worked for. But with these guys, everything just works seamless. They're always updating their platform. They're adding new things. So and also they just make it very simple to use. Now, there's a lot of information on it, but once you start to learn it, it's actually pretty simple. All the data is free. Okay, what I mean is normally you have to pay for exchange fees to be able to get quotes through the CME or which is the Chicago Merc, which is where the EMA trade. If you want to trade the Russell futures, right, you gotta pay the ICE for those guys. Okay, fees could be anywhere from $50 to $75 per month per exchange. With Thinkorswim, all those fees are included. There's 0 fees that you have to pay for on the data side. Now, on the flip side, you might pay a little more in commissions. Okay, and with that, you could go trade with like a Ninja Trader or somebody where you have a little less in commissions. Okay, but you don't get all the features and you don't get the support that you do like you would with Thinkorswim. So also, if you do trade a lot of contracts or you're going to, okay, over time you start to trade more and more contracts, you can always call customer service over at Thinkorswim, let them know you want cheaper commission rate, and normally they'll give it to you. I believe right off the bat you're paying $3.50 each way. If you ever hear round trip, that'd be in and out. Okay, so it equals about $7 round trip. But again, if you start to trade using volume where you're an active trader, you'll be able to get a lot cheaper commissions. What's the difference between the index futures? Okay, well, you have 4 major index futures. The ESs, which are the E-mini S&P 500 futures. You have the NQ, which is the NASDAQ futures, NASDAQ 100. Okay. Then you have the YM, which is the Dow 30. And then you have the TF, which is the Russell 2000. Futures. So all these are the indexes, and you can also trade the futures on them. You can also trade ETF stocks. So the ESs, if you want to trade the stock on it, is the is the SPY. Okay, also known as the SPY. That's the ETF for the E-minis. The NQ would be the QQQ, that's the ETF on the stocks. The YM would be the DIA, the diamonds, okay, to be able to trade the stock. And then IWM is the ETF for the Russell. Reasons there are S&P Emini futures. Well, there are E-mini futures for a couple reasons. Number one is for hedging, and number two is for speculation. Who would hedge? Well, anybody who has maybe a long stock portfolio where you have a bunch of stock, but you think the market's going to roll over, but you don't want to sell all that stock, okay? Well, you could go out and maybe short a couple E-mini futures to give you short exposure. So if the market falls, you're making money with the E-mini futures. Well, more than likely you're going to be losing money on your stocks, right? And then when you think the market's going down, you can always buy back those futures, okay? And then hopefully the market goes back up, your stocks go back up to where they were, okay? And now, instead of just kind of being neutral and didn't make anything, you actually made money off the E-mini futures that you bought. Also, huge pension funds, the big brokerage firms, what they'll do is when they run portfolios, right, they manage a huge portfolio, and they got hundreds of millions dollars worth of stock, even in the billions. Now, there are times where they need to hedge using S&P Emini futures, and that's what they're going to do, is they're going to go and short a whole bunch of Emini futures to kind of get them hedged to the downside in case the market rolls over. And then there's speculation. People like you and I, the retail trader, right? We're speculating on it to go higher or lower. At the end of the day, I tell all the students I teach to keep it in the most simplest form. The stock market's kind of like a game, okay? You're either betting for something to go up or down. That's it, okay? There's nothing that we're gonna do, so we're just kind of like a little guppy fish in the ocean, and we need to get from the Atlantic Ocean to the Pacific Ocean. Well, are we going to go swim on our own? No, we're going to go follow a big whale because he's going to actually cut through all the water, and we're just going to draft him, and so we're not going to have to swim as hard. That's what we're doing, okay? We're just speculators. We're looking for small intraday moves where we believe it's either going to go up or down intraday, and we're just trying to pick up our nickels and dimes. So that's it for about the S&P E-minis part 1, and the next slide will be on part 2.